Good morning, welcome to the market view for Monday the 9th of June 2014. Starting off with the 30-minute chart, we can see that we've got the non-farm payrolls news here for Friday, and then prior to this we can see we had a small run up to the upside from mid-morning, but again too close to the news announcement to really take anything significant out of it. At best, on this trade, there would have been available from the entry price here to the high of this bar, which would have been around 10 pips given the spread on the trade. So a fairly quiet market, just moving to the upside there on the sort of the first part of the session, just prior to the news, in fact, a couple of hours before. Then the news hitting the market and then moving lower. Now on this sell here, the market trading lower, the market taking out the 168 level and then moving down to the 178.14 level there, where the market actually filled this just below the DP. We then see the market come back above the DP, and any price that comes back above or back through the sell of the entry price, it's wise to mark up 50% above. This one isn't filled. Then we have a second one which takes us back towards the 168, and then we see the third one there taking us back to the psychological level there of 168. I will just summarize that again. If the market goes through the entry price and comes back, and in particular if it's a DP in the way or a psychological level, then you want to consider cutting down the potential loss on that, which in this case is 46 pips. So by doing this, you can see that we've reduced the risk from 16828 down to 16801 there. So a big saving there of 27 pips off the trade to protect and preserve our trading capital. And of course, on the overnight market, you can see the market's not done an awful lot, but it's starting to move back to the upside at the moment, because the pound will actually move higher with the Dow, because when the Dow moves higher, the dollar tends to move lower. So you can see what's going on there. So the market moving back to the upside, and if we have a look at the longer term picture, you can see there we've had a pullback, and now the market's starting to move to the upside there. We've already got the 16835 in place from Friday's overview there. We'll just get rid of the 62%, and we don't need these at the moment as the market's starting to move higher. So let's just move back and see if we can just find another upside target, just in case it continues to move higher. So you've got a 62 around with that 76 in this area here, which is the 168.31, and then above that 168.35, and then of course 168.50 will be the psychological level there. I don't think there's any news today. Let's just double check. No, there are no major impact news items out today. So again, it's down to the market to decide what it's going to do, given that there's no economic news announcements to actually move it. So it could be a fairly quiet day, of course, unless there's something of a political nature that is released by surprise to the markets, then expect it to be fairly quiet. And on the implied volatility front, the Dow making new highs again on Friday, and here you can see that we're down, heading back to these lows in the implied volatility, which means that the potential for a correction is still in the pipeline. So a new record low in the implied volatility would be ideal to see prices have a bigger correction in the underlying Dow market. Right, well, that's it from me this morning. It's short and brief to the point, not a lot to report. It's sort of the calm before the storm time at the moment. All things being equal, I will see you in tomorrow's market view. Have a great day. As ever, thank you for your support and also for watching.